Hello, everybody. Welcome to my profit and loss tutorial presentation. If you're unable to join, this recording is going to be left up on my Facebook group. But if you are here, welcome. All right, so I have this demonstration for you of how to easily read a profit and loss statement. We're going to break it down from top to bottom. We're going to find out what a profit and loss statement is, why it's important, and we're going to break it down piece by piece from top to bottom. So let's go ahead and get started here. I'm going to share my screen. All right. Okay. And we are sharing. So this demonstration is how to easily read a profit and loss statement. First of all, what is a profit and loss statement? A profit and loss statement, or as commonly referred to as a P&L, it measures your business revenue and expenses during a given time period. And it also will tell you whether or not your business is making money. So these are important things to know if you're a business owner or if you are having dreams or aspirations of becoming a business owner. This is an important document to know and understand so that you can successfully run your business. The purpose of a P&L is to calculate your net profit or loss. And it's also going to help you make informed decisions like, can I afford to hire some help? Can I afford to do some more marketing? And also, how much can I pay myself and save for taxes? These are important things to know. And by having a properly put together profit and loss, you're going to be able to help make those types of decisions. All right, so here's the good part. Every profit and loss statement is going to have 5 major components. So no two profit and loss statements are going to look alike, but they're all going to have these 5 major components. So, and this is in the order of how you will see them on the actual statement. So the first major component is revenue. So your revenue is going to be at the top of your statement, followed by cost of goods sold and gross profit, operating expenses, and net income. And we're going to break out each one of these components piece by piece so that you can understand how they are put together on the profit and loss statement. So just to recap, a profit and loss statement is a financial statement that outlines a company's revenue, costs, and expenses over a specified period of time. All right. Here we go. So starting with the top of the 5 major components, we have our revenue. Revenue is the money that your company generates from its primary business activities. It's also known as sales, income, proceeds, earnings. It's how your business makes money, and that's what's going to show at the top of your profit and loss statement. Here's some examples of revenue. So if you have rental properties, your revenue could look like rental income. If you sell a product or a service, your revenue could be labeled as sales. Maybe you're a private money lender and you earn interest on the money that you loan out. So that would be considered your interest income. We also have dividends income and professional income. So professional income could be maybe a lawyer providing services, or maybe you have a mentor that you pay, or I'm sorry, maybe you are a mentor and you have students. Your income is professional income. All right, cost of goods sold. So cost of goods sold is the direct cost of producing the goods that are sold by your company. So generally, you'll have cost of goods sold if you have inventory for your business. So inventory could be maybe you have an eBay store and you sell things that you hold as inventory, or maybe you're a fix and flipper and you have properties that you've purchased that are under rehab. Those would be considered inventory as well. Here's some example of cost of goods sold. So we have this guy here. He owns a chocolate factory. So we see that he has all of the ingredients to make his chocolate. He's got his cocoa, his sugar, and his milk. And that's the ingredients that he needs to produce his final product. And the final product is ready to be shipped off to all the stores that are going to sell it. So for this person's business, his cost of goods sold would be those ingredients right there, his cocoa and his sugar and his milk. And the finished product would be his chocolate. Once it's sold, that's going to be his operating revenue. But what if you don't have inventory? You're still going to have costs associated with sales that you do for your business. So that is going to be considered cost of services sold or cost of sales. That would look like commissions that you pay to your salespeople to sell your service. Or maybe you host an event and the cost of that event or the travel that you paid to get to that event, those expenses would be considered cost of sales if you generated sales from that event. So here we have this lady pitching a sales event to a group of people. So if she had to rent this room to pitch her sale and also the travel that she spent to get to this event, those would be considered her cost of sales for any sales that she generated from this event. All right, so we've got cost of goods sold, and we also have operating expenses. So every business is also going to have operating expenses. And even though they're both expenses, they do have some differences. So cost of goods sold is how much it costs to produce your products or service. And operating expenses are going to be the normal expenses incurred for the normal operations of your business to keep it up and running. And we're going to go over what some of those expenses would look like. All right. So once we have your operating revenue and then we take out the cost of goods sold or your cost of services, then you're left with your gross profit. So your gross profit is the money that you make after deducting those costs associated with selling your product. And this is how you calculate gross profit. So you're going to take your total revenue minus your cost of goods sold or cost of sales, and whatever you're left with, that's your gross profit. All right, so here is a sample of gross profit on a profit and loss statement. So we have Tunes Music Store here. So this is going to be a profit and loss for May 31st, whichever year they were operating here. So it looks like for May, they had 20,000 of sales, and then they had 8,000 of costs of goods sold. So their gross profit for this month was 12,000. Now let's talk about operating expenses. So again, operating expenses are expenses that are incurred through your normal business operations. So these are expenses that are going to happen whether or not you produce any sales for your business. So here's some examples of some operating expenses that most businesses will have. You have your payroll, benefits, insurance, rent, utilities, auto expenses, miscellaneous office supplies. These are typical operating expenses that every business is going to have, whether or not they're making any sales. Here's some other examples of some operating expenses. You'll have some travel involved, your maintenance and repairs, advertising, depreciation. All of these are great examples of operating expenses. All right, so let's get to the net income. So the net income is going to be your final number after your revenue is received minus your cost of goods sold or cost of sales. Then we're left with the gross profit. So then from that gross profit number, that's when we're going to reduce the operating expenses. And then that's when you're going to be able to see what your net income is. Net income is also known as net profit. So it's the total sales of a company minus expenses like cost of goods sold and all of those other categories that we just discussed. All right. So here's a net profit example. So on this particular profit and loss statement, this company earned $100,000 in total revenue. Their cost of goods sold was $20,000. So they were left with a gross profit of $80,000. Now we factor in the operating expenses. So here's their salaries and rent and utilities and depreciation. So their total operating expenses was $10,000. They have a reserve account for their taxes. We can talk about that at a later time. So for this particular business, their net profit was $30,000. Net profit is also known as the bottom line and net earnings. All right, so this is how we calculate it. So we take the total revenues minus the total expenses to equal the net income. Why is it important? Because it's going to show the complete profitability of your business. Where can you find it? It's going to be found at the bottom of your profit and loss statement. Remember, I said every profit and loss statement has the same 5 components. So whether or not your profit and loss statement looks similar to maybe your business partners with their other businesses, they're all going to look different, but they're all going to have those same 5 components. Other names for it again: net earnings, net profit, retained earnings. All right, so net profit is important because it shows how much money a company is actually earning. So I talk to a lot of business owners throughout the week, and a lot of them operate off of their bank balance. That's not a really good way to operate your business. And what that means is like they'll log into their online banking every morning and they check the balance of their bank account. Whatever that balance says, that's what's giving them their free will to make decisions for their company. That is not a good way to operate your business. You have to know what your business is earning on a monthly, quarterly, and annual basis in order to properly measure, the profitability of your business. So let's take a look at this profit and loss statement here. So this is for the year ending December 31st, 2020. This business had a total revenue of $150,000, cost of goods sold of $25,000. So their gross profit is $125,000. So now we factor in their operating expenses. Remember, operating expenses are expenses that are going to occur whether or not you're generating any sales. So here we've got payroll, utilities, rent, depreciation, total operating expenses of $50,000, reserve accounts for interest and taxes. So the net profit here, $45,000 for the year ending 2020. You see how that difference is here? So if this particular business owner was operating off of their bank balance, they're going to be misled because you can easily see here, they made $150,000, but once you factor everything in, their real net profit is $45,000. All right, so let's look at a sample of some profit and loss statements. And just a quick disclaimer, these are all stock images. These are not real P&Ls of anybody's business. All right, so here we've got a profit and loss statement for ABC Consulting, January through December 2022. And keep in mind, every profit and loss will always have the 5 major components. Here they are right here. You've got your income, cost of goods sold, gross profit, expenses, net operating profit. All right. And remember, that has different names: net income, net earnings. All right. So here we've got for the year 2022, total gross sales, 1.1 million. We had some refunds of 100,000. So the net sales was 1 million. Cost of goods sold, we've got materials and we've got some service labor here. So there's 600,000 of cost of goods sold. So our gross profit here, 400,000. So now let's factor in all of the operating expenses. We've got the advertising, depreciation, insurance, professional fees, office expenses, total expenses of 300,000. So the net profit for the year of 2022 for ABC Consulting, 100,000. You see how that started out as 1.1 million, but realistically, their profit, 100K. All right. Now we've got Logic Company. This is their P&L for 2014 and 2015. So this is the great thing about having somebody doing these books for you, or, let's face it, business owners, they don't want to do their own bookkeeping. So having somebody to do the books for you, you're going to be able to have these type of reports where you can compare year over year. Right now, if you're operating your business and you don't know what you made last year versus this year, or the year before versus last year, I mean, you're not measuring your business properly to be able to make informed decisions of what's working and what's not working. So Here we got gross sales 2015, 19,000 versus 15,000 in 2014. The refunds were 1,000 in 2015 and 100 in 2014. So you can see all the differences here year over year. But if you follow it all the way down, so let's point out our 5 major components here. So we've got our revenue, we've got our cost of goods sold, we've got our gross profit, we've got our operating expenses, and we've got our net income. So remember, I said no two P&Ls look the same, but they always have the 5 major components. So let's take a look at this comparison from 2015 to 2014. So even though this business made more in 2015, look at the net profit at the bottom. They ended up with less. So figuring out how that happened is going to be all told right here in the middle. That's the exciting thing about these things. I just love it. All right, let's look at a P&L with a loss. So this one is Q1 2013. This looks like a company that sells t-shirts or something. So we've got shirt sales of 14,000. Now this P&L looks a little different because if I were doing the bookkeeping, I would have put these items here under cost of goods sold because they were shirts that were bought and ink to make the shirts. So technically they are cost of goods sold. So, but in this particular statement, they just grouped up all their expenses together. So we've got shirt sales of 14,000, total expenses of 16,200. So this business had a loss of 2,200. So yeah, you can see how that can happen. But without measuring it and without seeing these types of reports, you're not going to know where you're landing at on a monthly basis or a quarterly basis for this example. All right, so that was the end of the profit and loss tutorial. If anybody has any questions for me, I will answer them for you. You can put them in the chat box. I will leave this replay up for anybody that wants to come and take a look at it again. Let's see if I can start this thing over. Let me stop my screen share here. If I can figure that part out. You know what? I did not. Here we go. All right. So yeah, that was the profit and loss tutorial. I'm going to leave this information up in this Facebook group, so feel free to rewatch it. Invite your friends to the group if you think that they would benefit from having this broken down for them. I hope you guys learned something. Ask questions. I will more than gladly answer them for you right here in this Facebook group. So I really hope you enjoyed my presentation. It went by very quickly. I thought it was going to be a little bit longer, but until next time, thanks, guys.